Hello my dear friends, I welcome all of you in my new YouTube video. Today we are going to discuss some serious issue, and that is how an NRI person file his or her income tax return. So when you are going to file your own income tax return, or if you are a tax consultant and going to file a return for NRI, then a few things you have to remember. First of all, we have to know how we will file the form along with file FA and FSI schedule. Along with, we have many confusions regarding NRE, NRO and FCNR account, etc. Today in this video, I will cover all the issues along with full and detailed explanation. So, when you are going to file a income tax return for non-resident, you should have a PAN number and you have to register it with Income Tax Department. Now, after completion of registration, you have to go to the profile section and make necessary changes. For example, your residential status should be non-resident. Now, you have to add bank accounts. After adding bank account, you have to go to e-file segment and then you have to select the relevant assessment year. For today, our present assessment year is 2026 and 27. We have to select it and then we have to press the blue color icon of continue. But problem starts now. To file an ITR, you have to know some basic IT related issues and rules also. So first, we will discuss who needs to file ITR, income tax taxable for NRI in India, documents required and filing process, and finally, tips to save tax legally. So now we will start our video, but before we start, we would like to request you to kindly subscribe our channel, press the bell icon of our YouTube channel. Now first we will cover who needs to file an income tax return, especially for NRI. NRI with total income, Indian income above 2.5 lakhs in a financial year requires to file. However, in the present financial year, we have new regime and old regime, so basic exemption limit may vary under new tax regime. Secondly, anyone who wants to claim a refund, for example, excess TDS deducted on every interest or rent or property sale, he or she have to file income tax return. Number three, if you have a capital gain from selling Indian property, shares or mutual fund, regardless of the amount, you have to file the ITR. Number four, if you want to carry forward losses, for example, business loss, capital loss, or house property loss in the future years, then it is required to file. And finally, even if TDS already covers your tax liability, filing is required to claim any refund or report income properly. Now, income types that are taxable in India for the NRIs. First of all, salary received or accrued in India. Next, rental income from property in India. Number three, capital gains from sale of Indian assets such as property, shares and mutual fund. Number four, interest on NRO account, FDs and bonds. Please keep in mind that interest on NRE account and FCNR deposits are completely tax-free, but still may need reporting. Now, what are the documents you require? First of all, a PAN card or PAN number is mandatory. Number two, passport. For residence proof and travel dates, passport is essential. Number three, NRE or NRO bank account statements for the financial year. Number four, Form 16 if salary income in India, or Form 16A if TDS on other income. Number five, Form 26A and AIS or TIS. AIS is Annual Information Statement and TIS is Taxpayers Information Summary. Both are available and can be downloaded from Income Tax Portal. Number 6, capital gain statement. For example, for property sale, sell deed, purchase deed, or shares or mutual fund broker statement or P&L statement are required. Number 7, rent agreement and receipts if you have rental income. Number 8, foreign bank details for refund credit. For example, we need IBAN SWIFT code if refund to foreign account. Number 9, tax residency certificate TRC if you are claiming DTAA benefits. And number 10, Form 10F. It is required for self-declaration and needed with TRC for DTAA claims. Now we will discuss the filing process step by step. First, you have to go to the portal and register or log in at incometax.gov.in by using your PAN number. Then you have to determine the residency status, for example, NRI, RNOR or resident, based on the days in India you stayed. Number 3, select correct ITO form. Now, two types of forms are available for NRI, ITO 2 and ITO 3. ITO 2, most common for NRIs. For example, if you have salary income, house property income, capital gain and other sources and no business income. But mind it, if you have business or profession in India, then you have to choose ITO 3. Now, pre-filled data is available and from 26As, AIs, TIs and other reports are available that you have to download. Next, you have to report all Indian income, for example, salary, rent, capital gain, interest, etc. Now, if there is any DTAA relief, then you have to claim it. If tax already paid in your resident country on same income, use Form 67 if you are claiming foreign tax credit. Next, you have to compute the tax liability. Old versus new regime are compared. In India, there are two tax regimes, old and new. If you want to know detailed process and detailed regime, you have to check my other videos. Now, after doing this, you have to pay if additional tax amount is due by filling up form Challan 280 and it should be done before filing. Now you have to submit your return and e-verify the return via Aadhaar OTP. If your Aadhaar number is mobile linked or net banking or EVC, it must be done within 30 days of filing. Finally, due dates. What are the due dates within which you have to submit the return? Usually July 31st for a non-resident, non-audit case. Now, I will give you some tips to save tax legally. First of all, use NRE account for foreign income. It is interest-free, tax-free in India. Next, claim DTA benefits to avoid double taxation. For example, get TRC from resident country. Number 3, invest in ELSS, PPF if allowed, and NPS for Section 80C type deduction. Next, number 4, reinvest capital gains under Section 54 or 54 EC to save tax on property sale gains. For example, you have to buy another house property or invest in specified bonds within the time limit. Next, claim deduction for house loan interest. For example, Section 24 is available for deduction, and after that, if Section 80C is opted out, then you can claim it. Now, offset capital losses against gains and carry forward unused losses for 8 years. Only the condition is that if ITR is filed within the due date. Now, if you have paid health insurance premium, then you will get deduction under Section 80D and it is done under old regime. Now, time your property sale, it's very essential to understand. To optimize the time of property sale, you should to know what is the short-term and long-term capital gain. Generally, the rate differs. Now, file on time, because if you file after due date, then late fee under Section 234F and other interest and penalties are charged. Now, the question arises how to fill out Form FA and FSI schedule. Now, remember when you are going to file ITR 2, you should file the form along with FA and FSI schedule. Now, what is FA schedule? Schedule FA means Foreign Asset Declaration. If your residential status is non-resident, then do not fill the Schedule FA. But it is very essential to know that if your status is resident and you stayed more than 182 days in any other country apart from India, then you should file Schedule FA. It is not applicable to non-residents and RNOR. The Income Tax Department's IT2 user manual specifically states that Schedule FA need not be completed by a non-resident or resident but not ordinary resident. But you should know what are the situation when Schedule FA is to be filled up. For example, if you were a citizen of a foreign country, you have stayed in India and the situation is that you have stayed more than 182 days, or suppose take an example, your citizenship is in Indian but you have stayed Australia for more than 182 days, then in Indian income tax return you have to file Schedule FA. Now, Schedule FSI, foreign source income. If your residential status is non-resident, again do not fill Schedule FSI. Schedule FSI is meant for resident taxpayers who are paying foreign source income and claiming foreign tax benefit or relief. Then, what should an NRI disclose in ITA 2? Now, look at it. As an NRI, You should report only the income that is taxable in India, such as salary received in India, if taxable, rental income for property in India, capital gains on sale of Indian shares, mutual funds and property, interest from NRO account, interest on savings account if taxable, any other income source in India. Now, generally, NRE account interest is exempted, FSI account interest is exempted, foreign salary receipt for services rendered outside India, it is not taxable in India for the NRI, and foreign bank accounts detail no disclosure in Schedule FA for the NRIs. I hope you have gained significant information from this video. I would like to request to subscribe my channel, and if you have any queries, you can send it to my mail or WhatsApp. Thanks for watching.